One of the premises that I've been working on lately is that, given what you say is an unprecedented event here with silver, is that, and silver continues to be in backwardation, which is now unprecedented as well since January of this year. Here we are in May, coming up right around the corner. That the spot to December 2015 contracts remain in backwardation. Even though the price of silver has risen from $27 or $26 when that backwardation started in January to where we are today, in the high 40s. Normally the higher price causes people to sell, entices them to get rid of their silver and to actually take dollars and hold the dollars instead. But instead, this time around, the higher prices actually increased the demand for silver and really hasn't produced a lot of supply. So, we've got a very unusual circumstance, and the question I'm sort of leading to is this premise that I've been working on, is that the futures contracts, or the paper market more generally, is starting to lose its importance as a price discovery mechanism, and more people are going to be looking just to the physical market itself. And I say this for a couple of reasons. Aside from the backwardation, you look at some of the funds, for example, Sprott's physical silver, PSLV, which trades at a huge premium to the actual reported spot price of gold. In a way, that's sort of indicating that there's a backwardation there too, because everybody knows that PSLV actually has the physical silver sitting there in the vault. So, again, given your 30+ years of experience in commodity trading, do you think it's plausible that the paper market could lose its importance as a price discovery mechanism?
Well, I think especially it's happening in silver because the price of gold has gone so high. A lot of people can't afford it, an ounce of silver, gold, but they can afford silver at these prices. And because of the West, especially, is so momentum oriented, all of a sudden it's becoming fashionable that to own gold, and we're talking about silver. So it was something the other day. Somebody was saying that that they went in to sell a little bit of their silver, and there was lines at the coin shop, and he thought it was people going to be selling their silver. They were buying. And I think it's very encouraging from our standpoint because it's making the life of the gold cartel and the people on the short side, it's ruining it. It's killing them. They're deep underwater. As you well know, they raid the market. They tried tricks by raising margin. They attack at certain times. It's not working. In the old days, years ago, they would make a move like this. It would be many, many months before the price could recover because there was so much technical damage in terms of the market. Now, because of the physical market, what you're talking about, and that's where I would say that's where the importance is, you get these dips. Boom. People are now flocking in on every dip. So their games don't work like they used to, and that's why we could have something that's never been seen before in a market in America.
A collapse of the dollar?
Well, I think that's too, but the silver going bananas. It just bid. And the shorts at some point, they have to cover some of them. Maybe not the ones being bailed out by the government, but if you're short silver, just the other day I put in my commentary, James McShirley, one of our Sharpie, was talking about Carlos Slim putting on hedges a long time ago.
Yeah,
he's getting
$27.
this richest guy in the world. Well, he's not going to be the richest guy in the world if this keeps going on.